Blog Talk Radio.
Here we go. Blast off.
This is True Capitalist Radio. True Capitalist Radio.
I am your host, the man they call Ghost.
The badass of business.
Give him capitalism or give him death. That's it. Period.
Broadcasting from his Skyline office studios in beautiful downtown Austin, Texas.
You sound fruitier than a box of Fruit Loops, for Christ's sake.
And now, he'll take it from here. Your host, the prognosticator of prognosticators, the man they call Ghost.
What's going on, folks? Thank you for tuning in with me to another edition of True Capitalist Radio. And, of course, I am your host, the man they call Ghost. And once again, folks, I want to thank everybody for tuning in with me. This is episode number 123 for all the folks that are keeping track of the True Capitalist broadcast. And once again, folks, before we get into anything, I'd like for everybody to please retweet the broadcast, go to the social networks, go to the forums, go to the blogs, spread it around, baby, spread it around like wildfire, and let everybody know that True Capitalist Radio is in effect in the house. Once again, I want to thank everybody for tuning in. I see we got a lot of people in the chat room with, a bunch of strange, weird-ass names. It's obvious that, we're going to continue to get a bunch of liberal, feminist, and gay and lesbian homosexual agitators that are going to attempt to, deviate the show into some kind of circus, half-witted sideshow. But let me tell you something, that is not going to stop the capitalist commentary that I conduct on the beginning of the broadcast, and we're going to start that right now. Let's go ahead and get through the markets, because I don't know about you folks, but I've been making some goddamn money. I don't know about you folks, but I've been making some damn money out here. And you can look back in the archives 3 weeks back when Dow Jones Industrials was about 11,800 points. The prognosticator of prognosticators strikes again. Lo and behold, where are we at right now, for Christ's sake? Where are we at? 12,719.50 points. And let me tell you, back then, while everybody was running out of the equities market, yours truly was going in and bottom feeding, baby. I was bottom feeding while everybody was like, oh, I think I need to sell my equities. I don't know. I think we're going into a ding. And, of course, folks, those of you that have been listening to me for a long period of time, you know as well as I, going back January, February, I was talking about this particular little economic retraction since the beginning. If you'd have been listening to this broadcast, you'd be making some serious money right now. If not, you'd be probably sitting there, counting the bacon bits that you're taking out of your shit funnel, because unfortunately you don't know your ass from your elbow. But let me go ahead and get through the markets here, folks, because goddamn, I'm making some goddamn money. Of course, baby, I've got me some Blue Label, baby, Johnny Walker Blue Label. You can't get any better than that, folks. So let me go ahead and say cheers to all the folks, all the capitalists that are out there throughout the world. I want to say cheers to everybody out there. Let me go ahead and take a sip. This is for you, folks. Johnny Walker Blue Label. Here's a $30 sip for you right here. That's right, baby. I love being a capitalist, baby. What the hell can I say? I love it, baby. I love it. I'm sorry. Anyway, Dow Jones Industrials was up 93 points, a percentage increase of 0.74%. Once again, I said it closed out at 12,719.50 points. S&P 500 closes up 14 points. That's a percentage increase of 1.05% on the day, closing out the S&P at 1,353.22 points. NASDAQ was also bonkers today. it was up 38.64 points, a percentage increase of 0.36%, closing out today at 2,872.66 points. And let me tell you something, I really hope that you took my advice 3 weeks ago when all these dumbass chickenhead investors were leaving the equities markets with their damn tail between their legs. I was out there buying, baby. I was out there buying, and you can look back in the archive if you idiots don't believe me. blogtalkradio.com/ghost. That's blogtalkradio.com/ghost. And let me tell you something. You look back on those on-demand episodes, you look back in the archives, and I guarantee you're going to see the prognosticator of prognosticator strike again. Woo! Anyway, let's go ahead and take a look at the commodities markets, because once again, even though we've seen increases in the equities markets, it's going against the grain of traditional investing. Back in the day, before the government got too involved with the equities markets, commodities markets, Wall Street in general, a fundamental investor would look at these kinds of gains that we saw in the equities markets today and would pretty much assume that you would see negative in the commodities market. I mean, that's how it traditionally went. It was a pendulum, so to speak. Well, if we look at the commodities today, are they decreasing? Wrong! No, they're not decreasing. On the contrast, these goddamn commodities are all going up. Oh, my God. Let's start with Brent crude, first of all, okay? Let's start with Brent crude oil. Brent crude oil was up today $4.87. That's a percentage increase of, get this, 4.29% on the day. 4.29% on the day. Are you kidding me? I'm telling you, our brethren out there in Asia and Europe are going to be feeling this in their pocketbooks if they're not already feeling it. Unbelievable. Gasoline futures were up $42 today. That's a percentage increase of, get this, 4.50% on the day. I mean, this is horrible. This is horrible. And why is this happening? Well, I'll tell you why right after I read the energy commodities prices here. Let's continue on. Heating oil futures, get this, it is up $13.71. That's a percentage increase of 4.63%. I mean, what the hell's going on here, right? Well, inevitably, folks, like I prognosticated back in February and March, and you can look back in those episodes also, folks, for all you ass clowns that are going to sit here and deny that I am the prognosticator of prognosticators. If you look back during those times, I had said instead, and then I'm going to continue to say, because I was right, that, the retraction that we saw in the spring was temporary based upon the spike in not only the energy prices, but the commodities prices. You take a look at all those commodities, take a look at the chart during that specific time, and I'm telling you, it's going to show you major gains in all those commodities, and that's going to be relayed to an already depleted general mass populace consumer. Do you understand? I'm not kidding. And that's why you saw the economic contraction during this specific time. You can even read it in the earnings reports of these general retailers like Walmart, Target, so on and so forth. But now, it's summertime, we're seeing a receding, or we were at least until the latest economic data that came out recently from ADP and other sources, but up until now, we started seeing a receding price in energy. We started seeing a receding price in commodities. And the reason we saw this was because everyone, including the speculators, everybody on Wall Street, anticipated that we were going to go into a double-dip recession. Well, I said that the only way we were going to continue on into a double-dip recession is if these prices don't continue to go down. They needed to go down below $99 and sustain that price for a considerable amount of time for us to not go into a double-dip recession. And that's exactly what happened. You can look back in the archives. I said it like 4 or 5 times a show, for Christ's sake, during those times. And that's exactly what happened. Well, anyway, economic data came out today. And tomorrow, the government employment numbers and the government economic data from the United States comes out. But before that, it has all been better than expected. Better than expected because why? Because Ghost had anticipated this all along. It's just basic sociology and basing it upon what you observe in the marketplace in America today. I knew that these idiots in America were not spending money because, well, they had no money to spend. I mean, they were spending it on groceries. I mean, the high commodity prices in February, March, April, May were ridiculous. You take a look at the energy prices. What do we have? Mid-March, we were up at $118, $120 a barrel. That's WTI sweet crude. So this relates on to the consumer, and this is why you saw the economic contraction. And as I said, that it may go into the summer, but as summertime goes along, what did I say during those old episodes, folks? For all the folks that have been with me for a long time, what did I say? What did I say? We're going to bounce back. And it's going to extend into back to school. It's going to extend into the Christmas holiday season. And lo and behold, that's exactly what it's doing, baby. And I am capitalizing, baby. I'm making so much money, I don't even want to talk about it because it's silly. You people are going to hate me. You know what I mean? You know what I mean? You're going to be hating on me, and I don't even want to hear about it. So you should have been listening. You should have been entertaining some of these ideas and financial and stock analysis that I was just relaying out here to the public for educational purposes. You should have entertained these ideas, and you should have made some goddamn money. All right? As a matter of fact, let me take another $30 sip on that note because I'm feeling great today, baby. Cheers, everybody out there. I love being a capitalist, man. I'm sorry. I love being a capitalist. Oh, man, it's so good. Anyway, like I was saying, the reason that we're seeing a spike in commodities is because of these unexpected numbers. The commodities investors are going to know that because we saw these unexpected employment numbers, unexpected sales numbers in the general retail sector, we're seeing a lot of positive numbers come out. It's not only affecting the equities, which was already depleted. As I said 3 weeks ago, it was oversold, way oversold. I even said that I wouldn't be surprised to see 13,500 at the end of the year Dow Jones Industrial. You can look back in the archive and listen to me say that, for Christ's sake. You know what I'm saying? I mean, how do I do this stuff, man? I mean, why am I not on CNBC, Fox Business? You know what I'm saying? I'm the prognosticator of prognosticators, for Christ's sake. It's all documented. If you assholes think I'm lying, you go back into the archive, blogtalkradio.com/go. So let me tell you, this little stock thing, it's not the only thing I predicted. I predicted so many things. You know, I'm like a freaking prophet, for Christ's sake, at this point in time. You don't believe me? Go back in the archive. But anyway, I'm just a messenger. That's what I am. Just a messenger. Anyway, natural gas took a little bit of a fall, for Christ's sake. It was down 5 cents, a percentage decrease of 1.23%. WTI sweet crude saw a big spike today, folks. All right? WTI sweet crude, $2.13 increase today for WTI sweet crude. That's an increase of 2.20% on the day, closing out WTI sweet crude at $98.78. Now, this little spike in economic productivity that we're seeing here, it could be possibly retracted if we start seeing these energy prices go up to $110, $115 a barrel. All right, mark my words. All right, mark my words. If we start seeing these prices once again approaching $115, $120 a WTI sweet crude a barrel, we're going to see another economic retraction. That's another prognostication that I'm saying. But of course, if we see, the Arab Spring matters and some of these oil-producing states, nation states across the world start receding, and we start seeing some of these oil transportation lines in some of these major nation states start, getting on track, and we start seeing a receding demand in some of these emerging markets, there could be a lot of different factors that could still curb the amount of price that is outgoing per a barrel of WTI sweet crude. So you always have to look into these factors. But I'm hoping that we can stay under $100 a barrel. I'm hoping. I mean, remember, Barack Obama, tapped into the Strategic Petroleum Oil Reserve, which is supposed to be set aside just in case these damn barrels